Welcome to Financial Focus, brought to you by Gulf Coast Financial Services founder and CEO, John Kuykendall. John and his team of financial, legal, and tax professionals have provided North Florida savers and investors sound, comprehensive financial guidance for over 25 years, helping you to achieve important life and planning goals. Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting GulfCoastFinancial.net.
And welcome into the program. This is Financial Focus, brought to you by the best of the best in financial services, 7 years and running, as named by the readers of the Lake City Reporter, the team from Gulf Coast Financial Services, and founder and CEO John Kuykendall with us as always to help uncomplicate the financial world, provide a little common sense on what we need to be doing with our planning, with our investments for a more secure retirement. John, we always appreciate your time.
Well, thank you, Peter. It's great to be here. I think we've got a really great show today. I'm always interested in talking about insurance and annuities. A lot of misconceptions out there, and anytime I get a chance, I like to clarify some of the ways that really it makes a lot of sense to look at life insurance and annuities.
Yeah, John, perhaps one of the most debated tools, or two of the most debated tools in the financial world, life insurance and annuities. And we really need to have some clarity on these, because there's some times where certain versions of each one of these could be completely inappropriate, but there are also many times where either one of these could be appropriate for a specific goal or a specific purpose.
Well, that's right, Peter. And unfortunately, they've got a bad rap over the years of bad salesmen, bad people, putting them out to the public, and also a lot of bad products that now aren't in the marketplace, and a lot of over assumptions. We're thinking that it was going to earn a lot more interest than it did, showing a lot of projections that weren't real. Life insurance itself got this kick that all it was for was death, and you had to die to get your money. And that's certainly not the case. It's a great tool now for financial planning, as is annuities, which also got a bad rap.
Well, I've even heard people say life insurance should be called the death insurance because that's the only time that it has any use. Now, there are some big values for that, because if we've got a mortgage, if we've got children, if we've got debts, if we've got a spouse that counts and relies on our income, any of those things, we want to provide that protection. And in fact, at its core, really any form of insurance, John, is financial protection that we are willing to pay a little bit of a cost for.
Well, that's right. I just got the renewal for my car insurance, and I'm looking at the price of that, and I'm willing to pay it, which it's a lot of money, but it insures my car and also me liability-wise, and that's what life insurance does. What it does is insure for a particular purpose. But Peter, over the years, we've been able to expand that to now we can use it for tax-free income during retirement, or we can also use it as a long-term care alternative and provide some long-term care protection through a life insurance policy and get a lot more bang for our buck than we could if we bought a regular long-term care policy.
Now, we can't do that with simple term insurance. Now,
No.
Term insurance, it has its time, its place, its value, but those additional benefits that you just mentioned, not available through term insurance.
That's right. Term insurance is cheap, and the reason it's cheap is about 99% of it never pays, and it's for a particular purpose. Young family, you want to insure a particular need. You're getting a SBA loan or a loan for your business, and you want to insure that. Term insurance will certainly work. But if you're looking at other types of insurance, we can do a lot more with the regular, as we used to call it, cash value insurance. But now it gives us a little bit more bang.
Well, again, we know that there's a time and a place for each different version. Not every version is right for every situation. So that's something, John, that we sit down with our financial and or insurance professional, the planner that we are discussing our goals with, and we arrive at a conclusion of which option is going to be best suited to help us achieve those goals.
Well, that's right. And what we need to look at is how much you can afford, what we're trying to do with the insurance, and how we're going to use it. We never want to buy insurance unless we have a purpose. And so what we try to do is define that purpose up front. And, one of the things that we don't really think about a lot is that life insurance still passes to the beneficiary tax-free. So, there are no income taxes on that. Plus, also, if we build up a cash value within that policy, we can take that out in policy loans and have tax-free lifetime income in a lot of cases. I just read something, Peter, that yesterday that last year, 61% of the people, 61%, did not pay income tax in the United States.
Wow.
That meant that the other 39% were paying all the income taxes in the United States. Now, as we know, because of all the increase in debt and the way the inflation has been working, we're going to have to raise taxes. And that percentage that's paying is going to have to pay more because they're the only ones paying. So why not figure out a way to have some tax-free income that'll come out in retirement so that you really don't have to pay taxes? It just makes a lot of sense. This weekend also, I read that there are 3 ways to avoid running out of money in retirement. One of them is to minimize taxes.
Yeah.
We don't want to pay any more taxes than we have to. The other one was manage your savings, which means we need to make sure that our portfolio is diversified, that we're totally not at market risk. And then the third one was downsize market risk. So make sure that we're totally not in the market.
Well, John, again, we've got these tools available to us of that group within the American public that does pay taxes. There are plenty of those that utilize tools and strategies to help control and minimize that tax liability each and every year and over the course of their lifetime. Life insurance and annuities can present us with some options, some choices for how to better address and control the tax situation that we set ourselves up for.
Well, that's right. And, like I said, annuities are tax deferred. You're only going to pay on the a preferred tax bracket because what happens is you're getting a return of principal and interest. So it works out great. And like I said, life insurance you can get with the tax-free income, certainly tax-free death benefit. And also it has a long-term care percentage, as does annuities, so that I can get double the income for 5 years or longer during my incapacity.
Now, annuities can be set up in different ways. We can actually structure an annuity inside of an IRA or inside of a Roth IRA. And if we did that, John, the income coming from that annuity that's paying us out for our lifetime would be tax-free because we've classified it as a Roth, correct?
Correct. If we did it out of our Roth IRA, and a lot of places now, even the SEC and some other regulatory institutions have now said that annuities aren't a bad thing in a retirement account. And they're making arrangements for some 401ks to provide that as an option. So if I had a Roth annuity, a Roth IRA, put annuity inside it, as I took that lifetime income that I can't outlive, then that would be tax-free for me.
Well, aside from the lifetime income and the potential decisions on how to set it up for tax implications, Robert Ibbotson is a famed economist, and he just recently released an article that was in Market Watch, and he said that annuities are actually serving some additional purpose in addition to the protection and safety and predictability of a guaranteed lifetime income. He suggested that these are really serving a replacement for bonds inside of an investment portfolio. Bonds or bond funds right now, because of the low interest rate environment, are paying out very little. The yield is very low. They are at risk. The principal can fluctuate, especially if interest rates begin to rise. And many times they include some amount of fees, either for the bond fund itself or for the management of the bond portfolio. And Robert Ibbotson he basically stated that if you replace the bonds with a fixed or a fixed indexed annuity, principal protected version of the annuity, that it could lower the fees to the overall portfolio, lower the risk to the overall portfolio, and often increase the income or the yield.
Well, that's right. Ibsen just said that in his article, that we could have a better chance of making more money with an annuity, a fixed indexed annuity or a fixed annuity in a portfolio than we could having bonds. And so he did make that suggestion that we use the fixed indexed annuities to replace the bonds. And, if you're sitting out there and you're listening to this and you have a lot of money in CDs and bonds, because you're worried about the market, worried about the investment risk, then an annuity or a fixed indexed annuity, may be the way for you to go. And we'd be glad to talk to them about that, Peter. We'd be glad to give them a review of their portfolio, look at their investments, and then decide how we can structure it so that we can get more money. That's part of that thing I talked to you about, the 3 ways we don't run out of money, is looking at our portfolio and structuring it properly.
Well, if you would like to take a look at your current plan, if you would like to have a financially focused retirement income plan put together, designed by the team at Gulf Coast Financial for you in writing, no cost, no obligation. All you need to do is pick up the phone and give a call, 386-755-9018, 386-755-9018. We talked about all of the different forms of insurance. There's home insurance, auto, medical, liability, disability. Not a lot of people understand or realize that you can actually insure your retirement income. And that's exactly what annuities do. And in fact, there was another recent article. This was from The Street, and it basically said that annuities serve to complete the retirement portfolio, to complete the plan, meaning that it addresses that big concern of running out of money in retirement, John.
Well, we've often talked about the income gap. And when we look at the income gap, we're taking a look at how much money you have coming in that's guaranteed each month in a monthly check, and what your expenses are. And then the income gap is the difference. And we have to either fill that out of our growth bucket, which is our investments in the market, or some other fixed income. And so annuities can provide us that income every month that's going to take the place of that pension. We've often talked about the greatest generation to retire, and that was the ones that retired the last generation before me, where they were still getting pensions. And I have several of those clients, and I'm telling you, it's like they make money during retirement. I haven't figured it out. They live good lifestyles, but every time I meet with them, I find out that they've got this stash of money in the bank that they've accumulated. And then I have to ask them, and they bring it to us and we put it into the market. But they live a much better lifestyle because they have enough income coming in every month to pay their bills. They're not worried about the sequence of return, not worried about the returns of the market, or taking money out in a down market.
The benefits of having certainty of dependable income in retirement. Yep. And John, in most cases with those with pensions, having personal savings and Social Security, in addition, having multiple streams that you can generate that income from.
Well, that's right, Peter. The more streams we've got, as I always said, the more arrows we have in our quiver, the more chances we've got to shoot and and hit the target. And what we're trying to do here is hit the target of having enough money to last me through my retirement and have the kind of retirement that I wanted, not just what I can get by with. And that's what we're really trying to do here. That's our mission, is we want the people that we deal with, the people that are our clients, we want them to have the lifestyle and the dream that they want to do during retirement, and not have to settle for a retirement because they didn't want, because they don't have enough income coming in.
Kiplinger just put out an article stating that retirees, it's not too late to buy life insurance. John, why would we want to buy life insurance in retirement? Is that still going to be a useful tool for us?
Well, sure. I mean, we have a lot of clients that buy life insurance in retirement. We can write life insurance now at 75, and that's not considered too old. And so a lot of people buy it in retirement because it does serve as that long-term care alternative. And at the same time, we're going to lose one Social Security check in a marriage at death. And so what we want to do is make sure that the surviving spouse has enough income. So if we don't need it for long-term care, it'll pass to the spouse tax-free. And it's just a great way to leave an inheritance to your spouse.
Thinking of my future, John, I feel like I would have a whole lot more confidence living a more fulfilled life, spending with my wife, when I know that I also have in place something that gives her the ability to refill that supply of dollars after I'm gone.
Well, yeah, Peter, and a lot of people feel that way. In fact, we just did that not too long ago with one of our clients. We put $150,000 worth of life insurance on both of them. And the idea was that if either one of them needs long-term care, we can draw out of those policies. If they don't, then it'll pass. If one of them dies first, it'll go to the other one, and they'll be able to make up for that Social Security loss. Also, in this case, a small pension, but they'll be able to make that up and have a tax-free cash balance that will be given to them that will make them make their retirement last.
John, on the day before we retire and maybe the several years leading up to it, the lump sum that we've saved and accumulated, our nest egg, is really what gives us the confidence of financial security to make that transition into retirement. But even those assets that provide that security need some protections as well. And it sounds like life insurance and annuities are two options, two tools that can help provide that additional protection to the assets that are providing us a sense of security.
Well, that's right. And it'll be a way that we can have enough income coming in that we can survive in a retirement, but it'll also be a way that we can secure our retirement by knowing that we got that monthly check coming in and knowing that our bills are going to be paid and we don't have to worry about anyone. I think that, it's a protection that we can get through annuities and life insurance that we can't get any other place. And so, we can't have all of our money in the market. It's great if market would go up every year, but we're in a 13-year bull market, and this ain't going to last forever. And if you retire next year and we're in a market correction, or in like 2000 to 2013, where the S&P 500 actually went nowhere, then that's going to hurt how much money you're able to pull out of your money. And so we need to have that guaranteed income coming in, guaranteed by the insurance companies, but always have been paid as long as there's been insurance companies in the United States.
Well, John, it's not until a downturn or a stressful situation that we see if the plan truly works. And that's really in contrast and contradictory to the mindset of many investors who shoot for higher returns, and that is the benchmark by which they measure success. Now, you help your clients manage those investments to try to grow those accounts, retirement accounts, investment accounts. Yes. But you also look at the plan holistically and try to put in those safeguards that will help them so that we can have a predictable outcome when those downturns or stressful times come.
Peter, we like nothing more than to have a great market, because what it does is it just makes my clients a lot more money. And I feel very good that we can do that for them. But I can't guarantee that every year. We don't try to do that every year because the market's not there for us. So we have to have a way that conservatively we can come up with this income plan. And if we do more than that, that's great. I'd rather under promise and overachieve than to be the other way around. We don't want to give somebody a income plan that shows that we're going to make 10% a year, because we don't do that. It's not realistic. But we're going to give them a simple explanation of where we are, where they are, and what things we can do to make them the retirement that they want. And we're going to look at taxes. We're going to look at estate planning, long-term care. We're going to try to maximize Social Security. We're going to do all that within the plan. And you said something a little while ago that about the life insurance. There's no better time to buy life insurance than today. Rates are cheap. Actuarially, we have long actuarial tables. The policies we have today are so much better than what we had when I first started 50 years ago. I got to tell you, it's a great way to go with new life insurance policies.
Well, we covered a lot of information on today's program, on this episode of Financially Focused, and we talked about some important forms of additional protection, some tools and strategies that you can put in place that you can consider when and where and how they are appropriate for your situation as you discuss your goals with the team from Gulf Coast Financial Services. They do offer that complimentary review, that strategy session, and to put together the written plan, the financially focused plan for your future. If you would like to take advantage of that opportunity, pick up the phone, give a call, 386-755-9018. That's 386-755-9018, 386-755-9018. John also is an author of the book Financially Focused. John, you make that available to listeners to the program as well.
Oh, sure, Peter. We'd love to send everybody one of those books. And what it is it's some way to have that financial focus that we're looking for, that financial focus on your retirement.
Well, if you would like a copy, or if you would like to sit down for an individual review and strategy session, pick up the phone and give a call, 386-755-9018. That's 386-755-9018. John, we always appreciate your time and guidance here on the program.
Thank you, Peter. It's great to be here. Have a good week.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services Inc., a registered investment advisor in Florida. Gulf Coast Financial Services Inc. is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.